Kia ora and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston and this is the international edition from interest.co.nz, and today we lead with news. Today is the day the US has promised to levy arbitrary tariffs, but still no word about how Australia and New Zealand will fare. It's not the end of August the 1st until later tomorrow in the US. In the meantime, Mexico has been the latest country to be granted a 90-day extension. Also, meanwhile, initial US jobless claims fell to 193,000 in the fourth week of July, just marginally more than seasonal factors would have accounted for. There are now just over 2 million people on these benefits, 82,000 more than the 1.9 million in the same week a year ago. US-based employers announced 62,000 job cuts in July, up 29% from June's 48,000, up 140% from the 25,000 announced in the same month last year. July's job cuts were well above the average for a July since the pandemic. And the US PCE price index rose 0.3% in June from May, the largest increase in 4 months, following an upwardly revised 0.2% gain in May. Prices for goods were up 0.4%. Prices for services rose 0.2%. The core PCE index, which excludes food and energy, also went up 0.3%, also its strongest gain in 4 months. Year on year, the PCE was up 2.6%. The core PCE was up 2.8%. With more broad tariffs ahead, plus firms now far less willing to absorb these burdens, the future track of US inflation looks like it only has upside. Personal disposable incomes in the US rose 1.7% from June a year ago, while personal spending was up 2.1%. In the industrial heartland, the Chicago PMI contracted much less in July after a good rise in new order levels, but it is still contracting, only slower. And Canada may be being disrespected by its bully southern neighbour via tariff threats and economic pressure, but its economy is showing remarkable resilience. In May, their GDP eased to just 0.1% down, while in June it rose 0.1%. This is far better for them than many may have expected, given the taunts and penalties they've had to absorb. Unlike Mexico, though, they aren't getting any delay in US tariff changes. And as expected, the Bank of Japan held its policy rate unchanged yesterday at 0.5%. The decision was unanimous, reflecting the central bank's cautious approach to policy normalization. And Japanese industrial production surged in June, and in quite an unexpected way. Year on year it was up 4%, month on month it was up 1.7%. A small retreat was expected. And the official July PMIs for China were released yesterday, showing their factory sector contracting at a faster rate and their service sector expansion all but evaporating. These results were not disastrous, but they will worry Beijing all the same. The vibrancy that they have recently refound isn't lasting. And there was some very positive Australian retail trade data released yesterday, and notably this is the final data released for retail sales as they shift to their monthly household spending indicator series. The final data for retail trade brought a 4.9% year-on-year burst in value terms, a 1.5% rise in volume terms. These levels are far better than any analyst was expecting. The contrast with New Zealand is rather stark. And there was a marked slowing in the growth of air travel in June, up 2.6% in June and half the 5.1% rise in the same month a year ago. The North American market was flat, but the Asia-Pacific international market rose 7.2% in an outsized gain. And the June air cargo market expanded little overall, up just 0.8% from a year ago. But that was because of a sharp retreat in cargo volumes in North America, down 8.3% for domestic cargoes, down 6.1% for international cargoes. Elsewhere, international cargo volumes rose 1.6% and Asia-Pacific volumes were up 8.3%. Container freight rates were little changed last week, down 1%, with outbound rates from China the weakest segment. From a year ago, these rates are now 56% lower, although to be fair, they were unusually high a year ago on Red Sea security problems. Bulk freight rates fell 5.3% over the past week, from the prior week to be 13% higher than year-ago levels. And it's probably worth noting that after the large fall in the copper price we noted yesterday, there's been no bounce. It's still falling. The US Treasury 10-year yield is now 4.36%, down 1 basis point from yesterday. And the price of gold will start today at $3,294 an ounce, up $17 from yesterday. And American oil prices have slipped back $1.50 at just on $69 a barrel, while the international Brent price is now just on $71.50 a barrel. And the Kiwi dollar was at 58.9 US cents and unchanged from yesterday. Against the Aussie, we're up 10 basis points at 91.7 Australian cents. Against the euro, we're unchanged to 51.6 euro cents. That all means our trade-weighted index starts today at just on 67.4 and up 20 basis points from yesterday, helped by a rise against the yen, which fell back after their central bank meeting. And the Bitcoin price starts today at $117,775 and essentially unchanged again. Volatility over the past 24 hours has been modest at plus or minus 1.2%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.